Hi, Dad. Are Social Security benefits taxable?
That's a great question. And the answer is it depends. I get a lot of folks that come in and they say, my Social Security is taxed at 85%. And it's not taxed at 85%. There's not an 85% tax rate for Social Security. But, however, 85% of your Social Security benefits may be subject to taxation. They up to 85% may flow through your individual income tax return and be taxed at your marginal income tax rate. Now that's different. That's not an 85% tax rate. That's 85% of the income of your Social Security benefits flowing through. Let's look at what that means. How much of your Social Security benefit will be subject to tax? Well, you're in luck because I'm here to help you answer that question. In order to do that, you have to calculate your combined income or your provisional income. Those are the same thing. Those words are used interchangeably online. So what is that? What is your combined income or provisional income? Well, for many folks, it's their AGI, their adjusted gross income, which is line 11 on the 1040. You can see that very clearly here. If you have old tax returns or a tax return from last year, you can look at line 11 on the front page of that 1040 and you'll see your adjusted gross income. Now, we want that number excluding the Social Security benefits if you're already receiving those benefits. So you'll see line 6A, total Social Security benefits, line 6B, taxable. We don't know that number yet. We don't know how much is taxable yet. So you want your adjusted gross income excluding Social Security benefits, taxable Social Security benefits. There are some other adjustments as well to adjusted gross income to get to modified adjusted gross income. Most folks aren't going to have this scenario where this comes into play. So their AGI will equal their modified adjusted gross income. But wanted to make sure that you had this information so that if this situation does apply to you, for example, you excluded income received for adoption assistance, or you paid interest on student loans and that was actually deductible, or you earned income in a foreign country, a U.S. possession, or Puerto Rico. You would add all those things back to get to your modified adjusted gross income. Now we're almost there at combined income. So you have your modified adjusted gross income, and then you want to add back tax-free interest. So typically this is like municipal bonds, because that interest is not taxable at the federal level. And then you want to add half of your Social Security benefits. So if throughout the year your Social Security benefits are $18,000, you'd add back $9,000. And this is for you and a spouse if you're married filing jointly. If your benefits are $30,000, you would add back $15,000. So you have your modified adjusted gross income. You'd add back any tax-free interest. And then you'd add half of your Social Security benefits. Then you have your combined income. So what do you do with that combined income? I got an answer for that too. So if you are married filing single and your combined income is under $25,000, then none of your Social Security benefits are taxable. If your combined income is between $25,000 and $34,000, then up to 50% of your benefits will be taxable. And if your combined income, remember, this is your modified adjusted gross income plus non-taxable interests, your tax-free interest, municipal bonds, plus half of your Social Security benefit. If all of that is over $34,000 and you're filing single, then up to 85% of your benefit is taxable. This is not an 85% tax rate. This is 85% of that benefit flowing through to your tax return. Now, if you're married filing jointly, the numbers are a little bit different. Combined income under $32,000, you pay no tax. Combined income between $32,000 and $44,000, you pay up to $32,000 to $44,000, up to 50% of your Social Security benefit is taxable. And if your income's combined income that is, over $44,000, then up to 85% of your benefit is taxable. Now, most people are used to a paycheck, right? You're used to W-2 income. and taxes being withheld every paycheck. Well, that's not the default with Social Security. That's not how it happens. If you apply for Social Security, you don't make any further elections, then that check that you get, 0% will be withheld. Now, if you want to adjust that, you would fill out Form W4V and submit that to the Social Security Administration. And you would do that either via mail or fax. And if you were to look at that form, that W4V form, you'd see that your options are for 7%, 10%, 12%, or 22% to be withheld. And if you don't have any withheld and up to 85% or any of it should have been taxed, well, then you may have a tax liability when you file your taxes, the following spring. Or before that, if you get your taxes done earlier than that. But just to be forewarned, this exercise is important. I think it's a great exercise so that you have an idea of how much of your benefit is likely to be taxed going forward. And it includes, a lot of different income, not just Social Security, where your combined income falls. That's what's going to be important. So the question is, are Social Security benefits taxable? And the answer is they can be. It depends on your income level. All good?
I got it. That makes sense, Dad.